I'm Max Keiser. Welcome to On the Edge. All right, how about this? How about we go to upstate New York and talk to trends forecaster Gerald Celente of trendsresearch.com. Gerald Celente, welcome back to On the Edge.
Hey, thanks for having me on, Max. I feel like it's Over the Edge.
That might be a good idea. Change the name of the show to Over the Edge. All right, now, Gerald Celente, your thoughts on the LIBOR rigging crime racket in which bankers colluded with government and central banks to manipulate global interest rates. Your thoughts?
It's going to be the top story in our upcoming Trends Journal that'll be out in 2 weeks. It's the crime of the century. It should be headline news. It affects virtually everyone on the planet that exchanges money. They rigged the game. Everything's been affected by it. What? $700 trillion affected by a small group of a crime syndicate rigging the numbers? It's a bank takeover. And it's at every level. How many more crimes do people have to see from the banking mafia before they get it?
Well, let me ask you a question. If I am one of these 18 or so banks that are part of the LIBOR rate setting, it's now obvious that most, if not all, were in on the collusion, and I am packaging a deal with, let's say, a sovereign like Greece to hide their debt, like Goldman Sachs was doing. Aren't I committing fraud on a couple of different levels here? Because not only am I avoiding the Maastricht Treaty by getting them involved in hiding debt, which is illegal to begin with, but I'm referencing on the indenture of the products I'm selling them, LIBOR rate, that I'm involved with in rigging. It's just another dimension to the fraud because all these indentures, all these securities, all these derivatives reference LIBOR by the same people who are rigging LIBOR. So everything that's tied to LIBOR is now suspect, correct?
Exactly. It's a criminal operation. They're rigging the game. And they're betting, knowing which way it's going to move because they're fixing the numbers. Oh, but I heard Robert Diamond, the former CEO of Barclays, say he was sorry. You or I or anybody else commit a minor infraction, and boy, do they slam you down. Hey, go back to England just a year ago. You remember the Nottingham riots. You know, when they killed an unarmed guy, and they said that the guy was armed shooting at them, and the people took to the streets. And you remember, listen to Cameron. Yeah, Chicken Hawk Cameron over there, talking about how disgusting these people were and how they were going to clamp down on them. Listen to all the clergy. Go back. It's only a year ago. How they came down on the people. And then listen to the white shoe language, the proper language coming out of Cameron's mouth and the rest of those little suck-ups when the LIBOR scandal hits. Oh, we have to look into this. There may have been an impropriety. You rob the entire world and they give them a free ride in merry old England.
All right, now, Gerald, with Trends Journal, your publication, you've been forecasting these events for many years now and been extremely accurate in terms of the trends of the crime waves getting more pronounced, more egregious, and everyone is involved in this racket. You've got the funds, you've got the rating agencies, you've got the accountants, you've got the Wall Street banks, and you also have the media. For example, the Wall Street Journal, which is owned by Rupert Murdoch, ran an editorial trying to position the LIBOR scandal as, virtually insignificant. What about the crossover between Murdoch, who's been caught breaking the law and spying on folks around the world, and his Wall Street Journal mouthpiece to compound this problem by utilizing it's outright propaganda, isn't it, Gerald Celente?
Or impropaganda. Look, Murdoch's, I can't speak for Murdoch, but if I was Murdoch, look at the difference. Murdoch thing has been in the news about him, the listening racket going on, they're spying on people. How come the British media isn't pumping up this LIBOR scandal like that? It affects everybody. It affects the entire planet. But hey, what's a LIBOR? Most people wouldn't know one if they got hit by one.
All right, now in the case of LIBOR, of course, it's the reference rate used, it underpins global security transactions, $800 trillion worth. It's a rate that's set by committee, and it's published. And it's similar to, let's say, what happens at the Federal Open Market Committee in Washington, D.C. They get together and they decide what the interest rate should be. It's not a market mechanism. It's done by central planning. It's done by a committee, and these rates are set accordingly. A lot of people now are stepping forward and saying, look, if LIBOR is completely manipulated, if the Fed is completely manipulated to support this Ponzi scheme with a global financialized markets that refer back to very little in terms of collateral, isn't it make sense then that we would see the exact same thing in the gold market? Doesn't this confirm what a lot of people have been saying about the gold and silver market?
Absolutely. I agree with you 100%. I've been saying this forever. They don't look. You see that the entire system's collapsing. When you really go back to the root of the LIBOR scandal, it was also to make it not look as bad when everything was crashing out in 2007, as we're finding out now. They lied about the stability of the banking industry, and they were saying that they were borrowing at lower rates to make it seem like the money was available. You go back, what just happened in Mexico at the G20 meeting and then the Euro summit. They can't fix the problems. The bankers know that if the people see how worthless that digital paper, not worth the paper it's not printed on, becomes apparent, and the people start running to buy gold, it'll crash the system. They're rigging gold like they rig the stock market, like they rig LIBOR, like they rig everything. It's one inside deal. And so they need to keep the price of gold down so that they could keep the Ponzi scheme afloat. It's as simple as that.
Right, and we've seen prices usually find their way despite all the manipulation. But I wanted to ask you about something that I saw happening in Oakland, California. There was a push to go after Goldman Sachs because Goldman Sachs was engaged in a number of deals in Oakland, California, the municipal bond deals that are tied to LIBOR. And what's being positioned here is that, well, you know, all these deals are tied to LIBOR, therefore they're fraudulent because Goldman Sachs is involved in rigging both LIBOR and these deals. And now there's this idea out there, Gerald Celente, of the trends forecaster, you know, trends journal. What is it true that we're heading toward what some are calling banking's cigarette moment, tobacco moment, where there's suddenly a realization that, you know, remember when tobacco, they said, yes, it does cause cancer, and that changed the industry. Are we headed toward this tobacco moment, Gerald?
No, not in the United States. Not in a situation where you have the gang of 535, the political mafia of congressmen and senators bought and paid off by the financial industry. They have a term they use over here to fund campaigns. They call it campaign financing. That's white shoe boy language for bribes and payoffs. They're not going to change anything. If they were, when the crisis hit back in 2007 and 2008, they would have pushed through legislation that would have prevented these things from happening. A big difference, Max. Go back to the crash of '29, and then you go into the 30s. The banks were demonized. They passed legislation such as the Glass-Steagall Act to prevent the banks from becoming these casinos that gamble. And of course, they were repealed under Clinton. But in this last round of crises, what did they do? The first thing that they did, they bailed out the banks. They're bailing out the banks everywhere. No, there won't become a cigarette movement. What there's going to be is an off with their heads moment. And it goes what you're seeing going on in Europe. Look at that guy over there in Spain, Rajoy. He ran on the campaign promise that he was not going to increase VAT taxes. They just got more money from the rest of the European taxpayers, $100 billion to bail out the banks. And what did they do? They raised the VAT taxes. Are the people angry? They're talking, again, the language. Spain might go into another recession. Recession? They're 24% unemployment. What recession? It's a depression. So you're not going to see that moment. What you're going to see, again, is an off with their heads moment as people take to the streets and want the heads of the people that are bringing them down. History is repeating itself.
Well, just in the last 2 weeks, Gerald, I've seen in mainstream media, for example, Nouriel Roubini made the reference that maybe these bankers need to be hung. Joe Stiglitz, another well-respected mainstream economist, referring to, well, maybe bankers need to go to jail. So this idea that, we need to get serious with the bankers and go for corporal punishment, because they're not responding to anything else, that seems to be now becoming more of the mainstream thought. And I wanted to ask you about the mainstream media, because recently these financial crime stories seem to be spilling out onto the front pages more so than at any time since the crisis began. Is that just, how do you see that trend developing?
I see that continuing. And I myself am getting more calls to the mainstream media to talk about it. But that'll only go so far. The action has to take place in Congress. And the Congress, as I said, is a gang of 535. They're not going to do anything. And particularly when you look at the track records of Obama and you see the track record of Romney. They're not going to prosecute anyone. And maybe one head will roll and it'll make it look like another Bernie Madoff moment. But the system itself is not going to change as long as the current system is in place, and that's called the Democratic and Republican Party, or the Bananos and the Gambino mob family. There's no difference, only the names are different, and the nationalities.
Let me ask you about a trend we see with interest rates. When the crisis started, Gerald, a lot of people were saying, a lot of really big names out there in the pontification space were saying, the bond market's peaked. We're looking for a bond market reversal, and yet interest rates have continued to decline. And now, in countries like Switzerland, we've gone into negative interest rates, negative 0.5% on 2-year Swiss notes. So people are buying these notes, locking in a 1.5% loss from the get-go. How much into the negative territory is this possible? As a trend. I think this is unprecedented. Your thoughts?
Well, it is unprecedented. I don't know why anybody would do it. But here's the deal. You keep hearing from the Fed, they're talking about keeping interest rates low to 2014. So they need to keep pumping dough into the system. Interest rates are going to stay low as long as they keep making the money available. At some time, it has to reverse itself. And when it does, it will be a real crisis. And I think the reversal will happen when no one is looking. And when no one is looking, it's going to be when we go into wars. That's when you're going to start seeing the reversals start to happen, because people will be focused on different things. For example, 9/11. The whole world was focused on 9/11. When they allowed China into the World Trade Organization? A couple of weeks later, when no one was looking. So what I'm saying is, you see things heating up in Syria. The war drums are beating much louder now against Iran. I believe there's going to be some kind of an event, be it false flag or real, that'll get the people's mind off the economy. That's when the situations will change. Bond interest rates will go higher, and then the people won't feel the pain as much in their head. They'll feel it in the rest of their lives because they will be distracted. They do this all the time. The crash of 29, the Great Depression, currency wars, trade wars, real wars. The panic of 08, Great Recession / Depression, currency wars are going on. You're talking about getting people's minds away from gold and keeping the price down. Look what's going on in India. I mean, they're one of the biggest buyers of gold. And now the government's putting restrictions and taxes on buying gold coins because the rupee is crashing. So what do they do next? Trade wars and hot wars. History is repeating itself. Only the tune is different.
Okay, let me return to something you said a moment ago, which is like, okay, we're going to bypass the tobacco moment. We're going to go right into revolutions and guillotines and juxtapose that with this idea that people are being financially repressed, the economists called it, or as the finance minister of Spain recently said about the people who bought preferred shares in Spanish bank stocks getting 7%, that, and after he repealed all those dividends, and he's eliminated all those dividends now, he said that they bought it without knowing what they were doing. So what about this idea that instead of a false flag, instead of a war popping up to deflect attention from the people getting absolutely screwed by these banksters, there's just more of a direct confrontation between what I call the savers versus speculators, between those people in Spain and everywhere around the world who have had their wealth, their dividends, their income, they're stolen for the banksters. We don't have that false flag. We go right into bankers versus the people moment. How is that a viable outcome, do you think?
Yeah, it is. But again, you go back to the Bankia situation. Remember what happened when they merged all of those banks to form Bankia back in 2010. They tried floating that deal on the world markets, and none of the financiers were buying into it. So what did they do over there in Spain? They suckered the average person into buying them, telling them it was in their national interest. And then go back and listen to how they lied about it. When Bankia came out with their earnings, they showed, several $100 million profit, and then a couple of months went by and they showed a $3 billion loss. So yeah, they're going to give them back a couple of pennies, chump change. So the thing is, yes, there's going to be this, it's happening. It's happening at different levels in different ways. For example, you want to have a nice time in Chicago? The system's ripping apart. You cannot have a system of so many haves and so many have-nots. That's what's going on. But the politicians don't want to talk about class warfare. Oh, why not? Because they're at the top of the class. So we're going to see a social breakdown, Max. How it manifests itself out directly, I think it's going to come from many different directions.
Right, the separation between the have-nots and the have-yachts, as we used to say in Wall Street. Now, along this line of escalating financial crimes, we have a new one with the collapse of PFG Best, a sort of Madoff meets MF Global. Tells us about the latest brokerage to collapse, and what does this say about what exactly so-called regulators are doing, Gerald?
Who are the regulators? Let's look at the guy that's the head of the Commodities Future Trading Commission, Gary Gensler. Where was he from? Gee, wasn't he from Goldman Sachs gang? Oh, yeah. Didn't he work with John Corzine, the guy that brought down MF Global? Yeah. They didn't bring up MF Global up on any charges, right? No. Has Corzine been brought up on any charges? No. He can't find $1.6 billion. Yeah, son of a gun, I had it somewhere. Where did I put it? I don't know. Oh, what's this guy over there with the one that just happened in Iowa where they can't find $200 million? Gee, I don't know what I did with it. The entire game is rigged, whether it's the LIBOR scandal, whether it's MF Global, whether it's this latest one where they can't find the money. There is no regulation. The only regulations, as I said, are for us. You go back a year, as I mentioned, go back to the Nottingham riots. Listen to all of these politicians screaming and yelling for the heads of the little people, for stealing, in the midst of a riot. And look how they talk about giving a free ride to all. Look, you just saw it. You just saw it with Barclays. This guy resigns, Diamond. I'm sorry. And that's it. Whoa, I'm sorry? Oh, and he left with $100 million. That's what he's worth. So no, it's not going to see anything other than a breakdown of the system and people demanding justice on their own. That's what happens, and you see crime happening at different levels. So all these scandals is just more proof of how corrupt the whole system is, and that the people that are watching the system are watching out for the criminals. That's it.
All right, let's go back to Europe for a second. In Germany, To cover up all the financial fraud, a major economics think tank in Germany is advising the government to force those with more than 250,000 euros in, quote, excess wealth to buy government bonds. Okay, now this is direct wealth confiscation, a trend that you see continuing. And isn't it a bit creepy, this idea of the German government forcing wealth confiscation from folks? Haven't we seen this movie before, Gerald?
Yes, and they're going to do it in some fashion or another. You mentioned the breaking of the Maastricht Agreement. And part of it was you're not supposed to bail out nations, right? And now, of course, the aspect in Germany about them forcing people to buy bonds. But it's really no different than a guy like Rajoy telling people that he's not going to raise the VAT tax and then raising them. And of course, that hits the working people, the average people. When the yachts club people, they're paying more taxes on something they buy. Big deal. It doesn't hurt them. But here's the biggest story to me, what's going on in Germany, and that is that's going to their Supreme Court, and that's whether or not to consolidate power and take it away from the German people and move it into the Brussels Bank. And to me, that was the big story of the so-called European Summit, when they gave the money, the bailout money, to Italy and Spain. The big news was the consolidation of power of a central bank put up in Brussels, a version of the U.S. central bank. So now all of the nations in Europe lose their banking sovereignty. That, to me, is the biggest story, because then it goes back to the LIBOR story, because then it's easier to rig the game when you only have two heads running the whole show. There's no, you don't have to go through any middlemen. The deals are cut a lot quicker. That, to me, is the huge story, is the consolidation of banking power being put in Brussels, along with the consolidation of the power that's already happened with the European Union and the Eurozone.
All right, Gerald Celente, we're going to have to leave it there. We're out of time. Thanks so much for being on The Edge.
Thank you, Max. Always been great being on with you.
All right, and that's going to do it for this edition of On The Edge with me, Max Keiser. I want to thank my guest, Gerald Celente of trendsresearch.com. If you want to send me an email, please do so ontheedge@presstv.com. Until next time, Max Keiser saying bye, y'all.